Hello, my name is Jimbo Jiang, a junior undergrad from University of Michigan. Today I'll be evaluating Subaru and Suzuki based on their past performance. Subaru is an auto company based in Japan with a market cap of 2.52 trillion Japanese yuan with a focus in middle upper class customers. Suzuki has a similar market cap of 2.79 trillion Japanese yuan and with a focus in industrial market and low-end auto market. Both of the company had experienced positive CFROI growth in the past 5 years. Even though Suzuki have relative low CFROI growth that under the discount rate, its CFROI level spiked in 2017 and remained growth in a 5-year period. The current market price showed a similar prediction of the future growth with Hope valuation model. With the exception of 2014, the positive asset growth along with outstanding CFROI level showed a great management skill. Relative streamliner growth for total shareholder return in the last 20 years could also confirm the market confidence in Suzuki. Subaru, on the other hand, had better stats on paper with an upside of 93% and higher CFROI and higher asset growth. However, its CFROI and asset growth has sharply declined in the last 5 years, forecast higher risk for the investors. The current market rate implied negative increase in both CFROI and asset growth is a sign of investors lose confidence in the company. Along with CFROI and asset growth, Subaru sales growth had went downhill in the last 5 years and approached 1% in 2017, whereas the industry average sales growth is over 10%. Subaru's unpleasant sales growth resulted in 11 months negative CFROI reversion and weak performance of stock price benchmarked with industry peers. As for today, 60% of the Subaru sales is based in the US, it could be bombarded with a new US tariff. Suzuki, on the other hand, has sales growth over 20% last year and exited the US market in 2013. The new partnership between Suzuki and Toyota in India could further facilitate Suzuki's sales growth. In the last year, Suzuki's stock increased by 10% and currently have a score of 90 on the scoreboard. 1% in deviation and 12% bias symbolize low risk for Suzuki. Subaru, on the other hand, is pouring momentum and relative high bias propose high risk for its. Subaru's 5-year decrease in CFROI and asset growth along with underperformed stock indicate high risk for the firm. Lack of diversity in market combined with a potential tariff could further slow down the sales growth. However, nearly 100% strong upside could be a good fit for the investor with high risk bearing ability in the long run. But in the short term, I believe a sell or short position with Subaru. Suzuki is a totally different story. The company had showed a consistent increase in CFROI and asset growth, along with a strong correlation between hold value and the market implied value prove the market confidence in Suzuki. Diversified market could further dilute the risk for investors. Suzuki will be a great fit for the investors seeking continued growth with a low risk strategy.